Assalamualaikum warahmatullahi wabarakatuh and very good morning, marhaban. Welcome to Iki 112 week 2. Week 1. I'm going to discuss a new topic that is manufacturing. No debit and credit. Yeah, the good thing is no debit and credit. Yeah, for this topic today. So we did discuss about service industry before this. For example, if you run a consulting firm, delivery services, yeah. So we don't sell anything, we just provide the service. We send good from location A to location B. So from there, we got the payment for our service. So that is service industry. Or another example is maybe you provide a cleaning services, yeah, cleaning services, yeah. So when maybe office cleaning, maybe residential cleaning, landscape cleaning services. So once your employee did the job, you bill your customer and make the payment to you. So you're not selling anything, you are providing service to your client. You are providing service to your client or customer. Okay. Like for example, Talaban or Zomato, they don't sell anything. They just provide service, pick up the good from the restaurant and send to your home. Yeah, am I right? So they are making money by providing services to the client as well as to the client. It can be the restaurant as well as the customer. The restaurant has to pay, the customer also has to pay for the service. So that is service industry. And then at the end of the semester, we move to retail type of business. What is retail? Where we have our inventory. We did learn about perpetual, periodic. For retail industry, retail type of business, the business purchase good from the supplier. Okay, they purchase good from the supplier, and then they put all the good on the shelf, and they start selling the goods to their customer. So they have products there, finished product, ready product. For example, if you're running electronic store or maybe handphones outlets, yeah. So you purchase various kind of handphones, put on your shelf, and then sell to your customer. So that is your product, handphones. However, for a certain kind of business, yeah, they don't buy the finished product. They buy raw material, and then they transform the raw material. There are some processes involved. So from the raw material, they will assemble, they will manufacture, they will cook, they will cut, or whatever process involved, and then they will create a new product, a new product. For example, maybe there are businesses, they purchase flour, they purchase oil, they purchase milk, butter, yeah, and all yeast. I'm not sure what are the ingredient, and they mix all this raw material and put into oven. They bake that raw material, then it transform to very delicious, yeah, cake, for example, or bread. So that is manufacturing. There are process involved transforming the items, yeah, that we call it as raw material to finished good, and then you're going to sell that finished good. Are you okay? Are you still with me? Yeah, can you give me a thumbs up if you're okay? Thank you. Okay, now you know how to use the thumbs up. Yeah, thank you. Okay, let us move. What we are going to cover today. Okay, I'm going to explain three ways in which costs are used by management for decision making. How? Why cost is important? Why cost is important? Why? How we're going to use this information for decision making? Number one. Number two, I'm going to explain the nature of manufacturing operations. Okay, I did give some introduction, some idea about manufacturing, so I'm going to give more. Then I'm going to define the manufacturing cost, whereby we can split the cost to material, direct material, direct labor, and factory overhead. There are three basic costs there: direct material, direct labor, and factory overhead. Yeah. Number four, explain the basic nature of absorption costing and cost allocation based on cost behavior. For example, we have this factory overhead. So how are we going to absorb the cost per unit? Per unit. Okay. Number five, I'm going to identify the essential differences in the financial statement for retail and manufacturing entities and prepare a cost of goods manufactured statement. That is a statement there. Cost of goods manufactured statement. Can I just use a shortcut for this? Just write down. I call it sorry. Normally I just write down this as CO, yeah, COGM, COGM, yeah, COGM statement, COGM, cost of good manufacture. There's a formula, you need to memorize the formula and apply the additional account and accounting procedure required for a manufacturing entity, including the completion of a worksheet. Yeah, how to prepare the worksheet. Explain how designing for sustainability contribute to minimizing and controlling manufacturing costs. We're talking about sustainability issue. Yeah, if you go to Dubai Expo, everybody is busy about sustainability. Okay. Let us start with cost and decision making. Okay. Some of the main reason managers need to know about the cost of manufacturing for decision making include the following. Why you want to know about the cost? Number one is inventory valuations. Yeah. The cost of manufacturing the finished goods and goods still in production. Good still, this is finished good. Good still in production, I call it as WIP, work in process. WIP, work in process. Assume that you are running a bakery store or a cake house. Cake house. So the finished good is the okay. When I came back to Malaysia during the break, yeah, for 2 weeks, and before went back, I went to the shop there, the cake house. You call it the cake house. I bought these Arabian sweets. Or they call it. I'm not sure what they call it. Pavlava, pavlava. Yeah, it's very unique. We don't have that in Malaysia, so I bought the sweet there. The puff. I think is it pavlava? Oh, no, baklava. I'm not sure. Baklava. Am I right? Yes, the baklava. Uh, nicely put on the box. Yeah, on the box. Yeah. So that is finished good. That is finished good. Very nice in the box. Yeah. I'll go back give to my girlfriend. Yeah. The girlfriend and my wife. Yeah. My wife and my mom. Yeah. Please. Okay. And then they have very nice note there. Very nice. Put it there. Very nice. Nicely. And that is finished good. Mean ready to sell. Yeah. To customer. That's finished good. Yeah. FG. We call it FG. FG. What is the good still in production or work in process? Is still in the oven. Still in the oven. I'm not sure whether they use oven or not. How they make, I don't have any idea, but it's not ready yet. So that is work in process. Work in process. Okay. The finished good and work in process. Okay, need to be determined so that these costs can be used in preparing the income statement and balance sheet. Okay, also known as statement of financial position. Okay, so you want to know the cost because you're going to put that item in your balance sheet. In your balance sheet, you have cash, account receivable, and there's one item there, inventory. Inventory. It can be inventory, finished good, inventory, work in progress. Another one is the raw material. So you need to determine what is the cost of inventory. Otherwise, you won't know what is your total current asset, total asset. So the first reason why you need to determine the cost is you want to use it to report in your income statement and balance sheet. Is it okay? Yeah, that's reason number one. This is reason number one. Reason number two is you want to determine the profit determinations. So to determine the profit, you need to know the cost of sales. The cost of sales. Okay. So if you don't know the cost of sales, so how are you going to determine your gross profit? I still remember what is the price for one box of these Arabian candies or sweet. I purchased at price, the sale price is 120 dirham. I think 120. If you can find any place cheaper, please let me know. So next time I can buy a lot. Yeah. Or you, or maybe if you have the factory, so you can give me special discount. Yeah. This is the selling price. The selling price. So we want to know the cost. What is the cost of this thing? The cost might be only 70 dirham AED. By knowing the cost, if you know the cost, then you can determine your profit. The gross profit, can anyone help me? How much is the gross profit? 50. Thank you so much. Your math is so good, yeah? AED 50. Okay. If you don't know the cost, so you're not able to determine the profits. I purchased the Arabian candies for 120 dirham per box. Okay. Okay. Mean they sold to me at 120. So they must know the price. They must know the cost. For example, the cost is 70. So by knowing the cost, they will able to determine the profit. So that is reason number two. Okay. The cost of manufacturing good need to be determined before price can be set. If you don't know the cost, so how are you going to set the price? Okay. Management decision application, this include pricing and planning. Sometimes they give discount, 20% discount, 30% discount, the new year, the Christmas sales. So they have a special discount, maybe up to 70% or 50%. So you cannot give discount below the cost. So you need to know the cost. Okay. So past costs are useful for future planning when adjusted to changes in circumstances. When dealing with the cost, sometimes the cost not much different compared to the previous period. So maybe there are slight increase in the cost. So when you make your projection, your forecast about future 2023, so you know what will be the cost of the raw material, what is the cost for the finished product, and so on. Okay. Now, finally, cost of alternative method of production are useful in planning the most efficient method of productions. Okay, if you are dealing with the electronics, for example, electronic items, maybe you produce handphones. Yeah, even though there's a handphones maybe produced by one company A, not all the component manufactured by the company A. Maybe they think it's more easier or cheaper to get some of the component from third party. So they purchase maybe the microphone from the third party. They don't manufacture all 100% the items. So this is what I call as cost of alternative method of production. If you have this handphone, this is your handphones, yeah, maybe there are 100 components. So you're going to do analysis on this 100 component, which one you're going to manufacture your own, which one you're going to purchase from third party, or you outsource the job to third party. So this is what we call as alternative method of productions. Okay. I still remember when about the electric kettle. You know, do you use electric kettle at home? Electric kettle in Malaysia, when we go to the shop to buy the electric kettle, you can find 30 brands of electric kettles. Kettle. Yeah, that used to boil water. If you look at the design, almost the same. Almost the same. The design is the same. The brand is different. Actually, all the product come from one factory, and then they sell the product to all these the electrical company, and then that company put their logo there. Yeah, it's the same product. It's much cheaper. Yeah, much cheaper to do that. Okay. So, what is the nature of manufacturing operation? The manufacturer will convert the raw material to finished good. Raw material to finished goods, finished product. So, a manufacturing entity use most of the accounting procedures discussed earlier, but require extra procedures for the collection, reporting, and control of production costs. So, under manufacturing operation, you have raw material. Raw material. There are certain processes involved. Certain processes. This is the process involved. Processes, and then you're going to produce what we call as finished good. Finished goods. Yeah, finished good. So this is the manufacturing. So for if you want to manufacture, maybe you want to produce. Let me just simple put cake here. Cakes. Cakes. What are the ingredient there? Can anyone help me? Flour, sugar. What else? Water, egg. Very good. Oil. Okay. And many more, and many more. So you need to, and then you must have this process. There must be a guy working here, manage the machine or prepare the dough. Yeah, I'm not sure how they're doing it. They mix, do all the mixings, and then going to put to the oven. There can be one, there can be two, there can be more workers do the process and then produce them. Yeah. Okay. So without this guy, the machine won't start, so we cannot produce this good. Without the flour, we cannot prepare the cakes. Without sugar, we cannot produce the delicious, the yummy cake. So these are the raw material. This is direct material. Correct? Direct material. Direct material. Yeah, that's a direct material. Okay. Okay. So in certain country they have GST. What is GST? GSE is a tax. It's a tax. Okay. The GST of 10% is added by the manufacturer to the price of goods supplied to wholesalers and retailers. Manufacturers must therefore issue tax invoice in the case of GST. But I'm not going to discuss this. Uh, I give you example. Yeah, maybe in order to produce that sweet, yeah, that cakes, biscuit, cookies, the cost is 50 dirham. 50 dirham. In certain country, the government will tax you, so you have to pay tax 10%. 10%, that's equal to 5 dirham. Yeah, 5 dirham. This one the manufacturer have to pay to the government. Maybe in Dubai you say 5%. Then I just put here 10%. Yeah, 10%. So the cost now become 55 dirham. AED 55 dirham. Yeah, just put example here. This is the cost. It become 55 dirham. 55 dirham. Okay, 55 dirham. So this is the cost involved. Yeah, 50 is the cost of the finished good plus the tax 10%. Okay, and then if 5%, then it become 250. 250. So the cost for that product will be 52.50. So that is the cost. Okay. So you're going to report that cost later on to the government, and they're going to pay the GST to the government. Okay. Next is production flow. There are two production department. Number one is assembly. Assembly is the process you manufacture the good, and the second one is packaging. You put the product to nice box, wrap it properly, yeah, put to the box, yeah, seal it. So that is the packaging. So raw material are purchased from outside supplier, from the supplier. You kept in the store department and issued when needed to the assembly department. We normally for the factory they don't buy the stock on daily basis. Maybe they have their system. They buy the stock, the raw material weekly or monthly, and then whenever they need, they will take the goods and bring it to the assembly or to the factory. In the assembly department, for example, each phone or each product is put together and then transferred to the packaging department where product is finished. This is example regarding the handphones. Yeah, you're going to put the process together. So this is the process involved. From the raw material, we'll go to the store department, and then they're going to assemble that, produce the packaging, and then put the packaging, and then from there it go to the quality control. This is to check the quality of the product, quality control, and go to the factory office department, and then will be distributed, yeah, to the customer. So the cost involved here can be the cost of wages for the assembly department, yeah, the employees there, maybe the cost of the part, the component. Maybe you have a depreciation of the machine. If you use machine, the machine will depreciate whenever you use the machine. Last time we have depreciation based on production hours. So depreciation will depreciate. And also the factory office labor. They don't do the job directly, yeah, but they monitor the process, yeah, manage everything. So this is the cost involved. So all these costs will be calculated and included in the finished goods cost, yeah, finished good cost, and then sent to the customer. And then cost the product will be sent to the customer. So this is the nature of manufacturing process. From the supplier, go to the store, assembly, packaging, QC, and then you're going to put it in the store again, maybe, and then send to your customer. What are the costs involved? The raw material, the direct labor, the factory overheads, yeah, all these are the three types of costs related to the manufacturing. Any questions so far? Any questions so far? No? Okay. Okay. Okay, let us continue. Let us continue with the inventories. Okay, manufacturing and non-manufacturing. Okay. First, the most important thing about inventory, the first type will be the raw material. The raw materials, yeah. The cost of the material and parts that have been purchased to make product is classified as raw material inventory. I did give you example about the raw material, so it should be no problem. For example, Maybe if you manufacture phone, so all the components and parts. Maybe the screen, the chips, the microphones. Yeah, this is for if you manufacture handphone. So you need all this raw material. If you produce cake, then you need a flour, oil, egg, water, yeah, milk, okay, and all these items. Okay. Then work in process, the inventory that is partly completed but requires further processing before it can be sold is classified as work in process or work in progress. So WIP is half done raw material, half done work. Yeah. For example, if the cake maybe it's still in the dough or you just put in the oven, it's not ready yet. Not ready. So not ready yet. It need additional process or additional time. Finished good is the ready product. This is the ready product. Ready product. So the total cost assigned during the production process to all product fully manufactured, 100% manufactured and ready for sale is classified as finished good inventory. Finished good inventory. So this is the three types of inventory. Always remember for inventory, we have raw material, work in process, another one is finished. So we have three types of products there. Okay. Okay, let us move to the nature to the product and period cost. These costs involved for the factory we can divide into two types of costs. The first one is the product cost. Okay, let me see the baklava. Yeah, the baklava. This is the cost of the product. Another one is the period cost. What is the difference between these two? This is the product. For example, baklava, the Arabian sweet. Another one is the period cost, maybe monthly or yearly cost. Yearly cost. Okay. So an accurate calculation of expense must be based on well-defined distinction between product and period cost because the period in which the benefit of any cost is received is in the period which the cost should be treated as an expense. So this is the period cost, yeah, between product because the period which the benefit of cost received is the period in which the cost should be treated as an expense. There's a period cost. The product costs are integral, a part of the producing the product as they necessary for its physical existence. Okay, so any cost incurred in producing the product, yeah, is called as product cost. Product cost. Yeah, the direct material is a product cost. The direct labor is a product cost. So we have to make clear distinction between product cost and period cost. Whereas the period costs are identified with a specific time interval because they are not directly required to produce a product. Okay, for example, if you want to produce the baklava, this is the cake, yeah, the okay. So what you need to do is you need the direct material. Okay, maybe in terms of kilogram, in terms of units, yeah, the direct material, the raw materials, and then you need a labor. You need someone to process that. We call it direct labor. Why direct? Because it directly involved in producing the finished good. This is our finished good. And then we have also, this is directly. If you want to produce more, you need more labor. If you want to produce more product, you need more raw material. So that is what we call as product cost. This is the product cost. On the other hand, we have period cost. in which identified with specific period time because they are not directly required to produce a product. For example, the factory, you have the rent, you pay the rental. Okay, this is important cost. Without the factory, you cannot manufacture the product, but it's not directly related to the finished good. Yeah, you can rent the factory, but you don't produce anything. You can rent the factory, it operates 12 hours a day, or it can operate 24 hours a day. So rental is not a product cost. Rental is a period cost. Are you okay with that? Rental is period cost. You have to pay this rent monthly, monthly or yearly, even though you don't use that building or that factory, or you overuse, run it for 24 hours a day, so you still need to use, still need to pay for the expense. So this is the period cost. Period cost, this is the product cost directly related to the product, directly related to the products. Okay. Okay, can I give you all a break for for 5 minutes? Is it okay? I give a break of 5 minutes.